Hello and welcome. This is the Market Wrap. I'm Agam Vakil. Well, it's turned out to be a challenging day of trade for those who are long in the market, considering the 80-point knock on the Nifty 50 index. As you can see here, we've seen an 82-point decline. The Nifty back below the mark of 11,000 at this point in time. What we've seen gains in Tech Mahindra, NTPC and Infosys, along with something like an Indiabulls Housing Finance, but there really hasn't been too much strength in today's day of trade. On the weaker end of things, substantial weakness in Dr. Reddy's Laboratories, Tata Steel, Lupin and Sun Pharmaceutical. So a lot of these pharma names showing up on the losers end, and along with more weakness in Tata Motors, well, grinding down even lower. When it comes to the broader markets, as you can see here, well, we have just about 60 gainers in comparison, 440 odd losers. And on the losing end, we have PC Jeweler. The selling gets more pronounced now, below the mark of 90 rupees per share. Den Networks, DCB Bank, NCC, along with something like a Jayaprakash Associates, all of them losing well over 9% in today's day of trade. We do have a bunch of gainers, and there is some momentum in Merck India, IGL, along with Narayana Hrudayalaya, as well as GE Power, well, advancing in trade, but the momentum in today's day of trade clearly lies with the losers. Where does that take us in the markets at this point in time, and what are the levels that we need to watch out for? This is what our technical analysts are saying about, well, the levels that one can keep an eye on as they move into trade. Listen in.
The previous swing high, that is 10,929, holds on till the time we can say for a short-term momentum, it would be bullish. Anyhow, if the strong support lies at 10,750 to 10,780 level, so that movement, the momentum for the higher share, that level should not be get broken.
Fresh buying in the market should be created only if the Nifty is able to break 11,000, 11,020 levels on higher side. Once the index is able to break 11,020 on higher side, then one can initiate long positions with a stop loss to be placed at 10,950 levels on lower side, for the upside target of 11,100 and 11,150 levels. Till the time the resistance level is not taken away, it's better to avoid long positions. Immediately looking at the chart, it seems that from here on, we can see a fall of 40 to 50 points, in which we can see levels of around 10,000, 900 levels. If 10,900 levels are taken away, then we will see extended fall till 10,850, 10,800, 850 levels. Till the time 10,900 is not taken away, Nifty will move in a range of around 10,900 on lower side to 11,020 on higher side. Either side breakout will give a move of around 100 to 150 points in Nifty. So at present, it's better to avoid long positions, buy on breakout, or if there is a dip of around 20 to 30 points from present levels, then one can initiate long positions with a strict stop loss to be placed at 10,890 or 10,900 levels on lower side.
Well, we shift focus to a stock which has not had a very good day of trade. Dr. Reddy's, as you can see here, it's down by as much as nearly 9% in today's day of trade. And we do have Darshan Mehta joining us to give us an idea about what's really gone on, some developments in the US, Darshan.
Yeah, so basically, if you know that last month or in the last few weeks, Dr. Reddy's has rallied around 15-17%, and that was because they launched this drug called Suboxone. Now, what happened was that in news that came in on Saturday, the US District Court has said that, you know, till the time the litigation is not complete, Dr. Reddy's cannot sell this drug, and that was filed because of the parent Indilever, which said that they want restriction to be put on Dr. Reddy's to sell this drug, and that's why this big cut that came into Dr. Reddy's. Now, what has happened is when Dr. Reddy got the US FDA nod, they launched it at risk, which and at risk means that, you know, they've launched the drug knowing fully well that, you know, there could be penalties that could be levied, which could be high as 3 times of the sales amount that they do in case they lose the bid. To compensate for that, the court has asked Indilever to sign a bond. The amount will be decided later, but in case Indilever loses the battle, they will have to pay that to Dr. Reddy's. But as of now, Dr. Reddy's can't sell. Why is this negative? A lot of analysts had built estimates into Suboxone for FY19. Probably that will be delayed. More competition will come in. That means that, you know, the market size will become less attractive, and the time that they have to monetize this product also goes down. Obviously, the penalty is also a big overhang on Dr. Reddy's, and because of that, Dr. Reddy's was down almost 9% in trade.
Right, some challenges there for Dr. Reddy's. Darshan, thank you so much for joining us and giving us those details. And from the pharmaceutical space, I'm going to move on to IDBI Bank, and we've had developments here as well, where LIC is picking up stake. We have Reddy joining us now to give us an update. Reddy, what's going on?
So 2 regulatory approvals done, with IDBI also approving the deal. Now Life Insurance Corporation of India's board has also approved that they would be able to increase the stake to up to 51% in IDBI Bank.
Right.
However, there are a few contentions that are there. Subhash Chandra Garg, who is the Secretary of Department of Economic Affairs, told reporters at a press conference in Delhi that this would have to be done through the issue of preferential shares if IDBI Bank needs to get the capital. The second thing that he pointed out was that even though an open offer may not be required, if it is, LIC would go ahead with it. However, because the public shareholding is very low, he indicated that it would not be very material to the deal. Now, to give you a picture of how much LIC currently holds in the bank, its shareholding is about 8%, whereas the government holds 86%. Going by the method that Subhash Chandra Garg has suggested, it will require fresh issue of equity, which will bring the public shareholding down to 2%, whereas the government shareholding would then be at nearly 47% for LIC to get a 51% stake. Additionally, according to ICRA, this would not, although positive, this would not have a very significant impact on the ratings of the bank, as the investment that LIC would make would come from the policy holders book, and will have to be pared down to 15% over a period of time as per the regulatory requirement. So a few questions that still remain unanswered here then are that would LIC then be allowed management control? Considering this would be a preferential issue of equity shares as suggested by Garg. And the second question, if it would get an exemption for an open offer from SEBI.
Well, fair enough, Reddy. We continue to look out for answering some of those questions, and valid ones too. Thank you so much for joining us and getting us those details. And finally, let's address what's happened with Hindustan Unilever. Numbers are out. The revenues look just a tad below expectations, but the positive here is, well, firstly, margins expansion substantially at around 23.7% against the expectation of 23%. And secondly, its volumes growth number, underlying volumes growth number coming in at around 12%, which is the higher end of the range that Bloomberg Quint was working with at between 11 to 12%. Of course, profits have also moved up around 19%. So all in all, it looks like an operationally stable quarter, and 2 takeaways from the management. One is that rural growth is substantially higher than urban growth, and similarly, middle India growth is also substantially higher on the back of low base. On the whole, they're going to still wait and watch for a few more quarters before they can actually say that a substantial trend has been established in a turning point in demand. But until then, where they're just going to leave us guessing. But for now, the numbers look largely positive, despite the fact that the top line has seen a little bit of a miss. Strong operational numbers coming through on the back of strong volumes around 20%. And with that, it's a wrap on the markets, but lots more lined up. So stay tuned in the Bloomberg Quint, and we keep bringing you more.